Welcome to this week's version of Nickels and Dimes, our weekly video series. Well, the markets continue to be volatile and challenging, particularly the equity markets, that is. And, I don't have to tell you, look at your statements, and unless you're in cash or shorting, you're likely in some level of pain. Things have been challenging, nothing new. Last week, the CPI data came at 9.1%, meaning, the inflation data, and things may get more challenging for folks in terms of costs, which obviously very likely will continue to negatively affect the equity markets and, of course, purchasing power. One of the questions, and I noted on this last week in our video, that we've received most recently is, well, Chris and team, has the markets bottomed yet? So what we thought we would do is put together a series of videos, and this is the second of a three-part series that talks about characteristics that often show up, at least historically, when the markets are near a bottom. So if you haven't seen last week's video, you can go on our website at nickelswealth.com in the video tabs and check that out. But again, today we're going to talk about the second one that often shows up at a market bottom. So let's dive into that. So again, markets tend to bottom when, and this is what we talked about last week, equities are a certain percent of an investor's portfolio. You may recall that markets tend to bottom when equities are around 45% of an investor's portfolio. Most recent data showed that we're at around 65%, at least based on a recent AAII survey. So it would imply the equity markets likely have more downside to come to at least match what the last three bear markets have done. But today we're really going to talk about inflation. So markets tend to bottom, at least studying history, when peak inflation has been reached. Again, as we talked about, everyone knows we are all dealing with inflation. Obviously, gas prices being, one of the, let's say, commodities that we talk about most recently. I know they've come down, most recently, but inflation is rearing its ugly head. You go to the grocery store, obviously cars are still expensive. Again, gas prices are driving a lot of that. Generally cost of products increasing, or at least staying at, pretty severe highs. How much worse will things get? But generally speaking, the equity markets, at least looking at history, have bottomed when peak inflation has been reached. So we're going to look at some data that will show you, or at least confirm what I just said. So this is a chart of the S&P 500 index since, let's call it, the early 1900s, with this orange line being inflation. Again, here we are on the far right. And the, let's call it, light gray-ish line, that's the equity markets. You could see it's fairly telling. So in the mid to late 50s, when we had, peak inflation, you could see the equity markets bottomed. You notice the consistency here. Many years later, we had peak inflation and the equity markets bottomed. Fast forward, 20, 30, 40 years, when we had peak inflation and the equity markets tended to bottom or near a bottom. Many decades later, we had pretty severe inflation where, inflation was probably in the mid-teens at that point, or at least low teens. Again, equity markets were near a bottom. Fast forward to 1989. Again, focusing on this peak inflation chart, which is that let's call it orangish line, where the equity markets were near a bottom. Again, notice the consistency. Fast forward to around 2009-ish, in that time frame, the equity markets bottom when we had peak inflation. Now here we are on the far right. Again, the most recent CPI data came in at 9.1%. We all know that there's many products and goods, if you will, that are significantly more expensive, and their rate of inflation is greater than 9.1%. But that's what the government officially tells us. So the question really is, have we peaked? So here we are, where inflation again is around 9.1% per the government. Obviously the markets are well off the highs, depending on the indices, anywhere between 20 to over 30%. If you're looking at the NASDAQ, that's the question of the day. But it's important to look at history to help guide us. Again, it's not a one-to-one ratio. Again, what happened in the past may not necessarily equal the future, but it tends to rhyme. So have we hit peak inflation? That's the real question. So if we have, odds favor the equity markets have bottomed. Again, at least looking at past data, we've seen a number of markets where we could study the past and give us an indication what may happen in the future. Has peak inflation been hit? The question is a great question, and here's the truth. No one really knows the answer. Now, we've had at least a short term, at least, again, based on gas prices come down, over the last few weeks. That's good news. You see housing starting to pull back in terms of price. There's, more supply coming on the market. The Fed has been consistently raising short-term rates. They've said they're going to continue. Obviously, that's, rearing its ugly head in terms of asset prices. We're all feeling that. Has peak inflation been hit? Again, we'll continue to see. All that to say is, if you would like a second opinion on your portfolio financial situation to determine how the markets are affecting you, if you are in the right investments, remember, things could get more challenging. And if you have not made any changes to your portfolio or not sure what to do, certainly it would make sense to get a second opinion, at least in our opinion. So you can go on our website at nicholswealth.com. On the upper right-hand tab, here's this Contact Us tab. You can click on this, fill out the information, and one of our advisors will reach out to you. Thanks again for watching. Bye-bye.